Hey everyone, Tom here. Today we'll be talking about the latest stock market news that you should be looking out for, as well as our technical analysis levels for the S&P 500. Yesterday we saw a key break above the 3230 on the S&P 500, and this signals further bullish momentum. Where to next? Stay tuned. I thought today we should start by just talking about stimulus in the economies, because this is a big driver of the stock markets. We know the Federal Reserve and other economies are kind of underpinning their stock markets with this stimulus. So the EU leaders have clinched a 750 billion euro recovery fund as of today, and it's no expectation or surprise that this happened. The thing is though, the markets love this, and every single time some stimulus seems to be tabled by a country, it is getting passed very quickly as policymakers are trying to just instantly fix the problems at hand. When we take a look at this federal stimulus payments to individuals and Federal Reserve balance sheet put together, you can see this grey highlighted area here and how much it's really gone up. So it begs the question, if we're sitting at 10 trillion total being pumped into the markets over the years, and specifically around 6 trillion just in the US, where did that go? Well, one of the things that shows us that is the retail sales figures. Take a look at the V-shaped recovery in retail sales in America. This is unbelievable, these figures. Look at the GFC over here in terms of the expectation and what happened over time and how long it took to come back up. And look at the power of stimulus. In Australia, we have so much stimulus as well. We have all these job seeker and all these special stimulus programs going to individuals. But another thing we allow is we actually allow people to access their super or 401k early for a certain percentage. A lot of people are doing this, and all of this money is going into retailers. It's also going into the stock market, and that's part of this flow-on effect of massive amount of retail speculation in the stock markets that's helping potentially make it go higher. Another thing that's happening is we're seeing a lot of earnings beats. IBM had an earnings beat. If we take a look at the earnings beats in general yesterday, take a look at this. These are all the companies that reported yesterday, and this is marketwatch.com if you don't have an earnings calendar like this. And everything was beating. Look at the beats. We talked about it in our weekend wrap. We said that around 75% to 78% of companies had already been beating or meeting expectations. And if this trend continues, expect the market to continue to run up as federal stimulus alongside actually better than expected results buoy the market to a higher level. The melt up is certainly occurring, and we have some big earnings today with things like Snap, Coca-Cola, and many other large companies reporting their results. So will they do well? Well, time will tell, but overall it is looking to be a positive earnings season thus far. A lot of it will come down to, of course, Microsoft and Tesla on Wednesday. I think that'll be a cracker. They are going to happen after the market, so make sure that you're prepared. If you're in those trades, it's going to be a pretty scary aftermarket depending on how they go. But at this stage, you should see positive sentiments in the market. When we take a look at the movements yesterday, as we like to do with this heat map, all the stocks we were talking about hitting their 20 moving averages yesterday, which was a strong first buy zone, Microsoft, Apple, Google, Facebook, Amazon, look at how they came off. Everything that happened in terms of them being down last week fully reversed, and this is a huge reason why the market was up. Yesterday, Microsoft and Amazon were down for the week. Now they're up for the week. And when we look at the one-day performance, many other sectors were down while all of these big tech stocks were getting picked up. The 20 has just been amazing from a technical buy level on so many of these stocks. So let's get into those technicals. Well, there's so much to unpack today. First thing, let's talk about this close above the 3230. We saw the stock market close above the 3230. It is a confirmation close on the real stock market, and the commitment of the buyers seemed to be there. Basically, they were there all the way to the end of the day, and the market barely went down. In terms of the wick, barely went down. Big, strong body close. Futures are trading also up right now, even higher. So we'll talk about the futures market after we just discuss what this is telling us about future movements in the market. Well, the first thing that generally we want to be doing is you want to look at what a channel or what this is telling you. We've been talking on our weekly kind of analysis that the big one is the bodies of the weekly, and they were about 200 points apart. So if we take that distance and then we extrapolate that out, that's going to give us a good take profit level on the market. Notice I've already got an alert just a little bit higher at that level. I set that just because I want to know if it's making a new high. But effectively, it looks like the stock market wants to go and test the previous pre-crisis highs, and it may do so quite aggressively. If these earnings continue to beat, that would be a strong catalyst just to continuously push it longer and longer. But we have definitely broken past the top of this channel, at least technically. When we go and we look at the futures, what's been happening? Well, we've left our lines up, and I just wanted to discuss. So the 4-hour came through, and of course it's moved up. Usually what you would expect to see with something where a key resistance breaks is it comes down and actually tests that level and it acts as support. What have we got on the 4-hour here? Well, we have a 20 moving average. If it did come back down, it would hit the 20 moving average, which it's found support at already twice, and that would act as dynamic support while we also had the previous resistance acting as support. We know that the channel break should be into the previous highs, so this would be a good level to basically look at. And then what we would want to do is we'd even want to break it down if we could further and look for a change of trend, where basically we have a trough at this level, then we have a pickup in the market, it makes a peak, and then it comes down, makes a higher trough, and then it breaks that peak. And when it does this, let's say it was on, this is a 4-hour, so it might be on a 15-minute or 30-minute chart, that would show us an even stronger change of trend to the upwards direction, and would be a very strong signal to pick up this zone. So right now we've got the close confirmation. We have the 4-hour that's of course bulling up, and we're trading at around 32.76. If we dial it down to a 15-minute, we can have a look at how the market interacted with this zone, and it did not stay around very long on the smaller time frames. It basically got through, came straight back down, bull hammered off it, and then just went on and on and on and up and up and up. In my experience, I usually expect the market to come down and test the area of role reversal. During this entire run up, we have seen those levels generally get tested. If we go back to the 4-hour and we have a look over to the left-hand side, when we saw, let's say, this resistance get broken, it came back down and it tested that resistance, which acted as support. Again, if we usually see things like this, the resistance over here got broken, it had those couple of cool big days, and then it came down and it tested that level as support. So usually these key levels do get a second chance, and they do get you in, or they do give you the opportunity to take those positions. Will this time be any different? It depends on earnings, but if we see a bit of a mixed bag, or there's a bit of profit taking ahead of maybe the Tesla and Microsoft earnings, we might see the market retrace back to this level, and then we will see most likely bullish momentum or bullish power at this zone. The only thing that comes into that from a technical analysis level is these are statistics. Remember, you are playing percentages, and that's why you want to pick key zones that give you the best chance of being right. This is definitely a key zone, and it's definitely worthwhile considering setting your alerts for these levels. I'd like to always recommend, though, that you use your own analysis and, of course, make your own decisions, as this is just my opinion and my opinion only. From a dollar index perspective, is what's happened. Well, we had that channel we talked about on the weekend, the downward descending channel here. We are testing the support and we are trying to get through it. And now we've talked a lot about dollar strength and dollar weakness. And if we are seeing dollar weakness, then dollar weakness generally means risk on in the markets, or people moving money into the markets and out of the US dollar. We're sitting right on that support here of around 95.75. And if it gets through this zone, it's going to probably do something like this, where it breaks through, comes back up and tests it, and then we see it go on and flow on to the next level of support. When we zoom out, where is that next level of support? Well, it's over here, all the way down at this level here, which is about 94.77. So there's a bit of movement in terms of dollar weakness if it gets through this zone and breaks past this support. It certainly could, and it certainly could sell off tonight and cause further risk on momentum in the stock markets. We've talked a lot about how the Aussie dollar is pretty much trading similarly to the S&P 500. Again, it cracked out and made a new high at the same point as we saw the US 500 or the S&P 500 make the new high. Very similar technical analysis. The only difference with the Aussie dollar is it actually was making a series of higher lows on the way up. So it was really bullish in terms of moving up to this level, and it was certainly gearing up to break this zone. So very similar on the Aussie dollar. It's going to probably trade like the US 500. If the US 500 comes down, it will hit this level and then hopefully bull up if that's the direction you want to take it. So we've seen a lot of key breaks across a lot of key currencies and indices. As well as that, we've seen it on the ASX 200. We've seen a strong break above that 61.30 resistance, which acted before, and we're hitting previous highs here at 6200. Our market here in Australia has always been a little bit weaker, but again, that series of higher troughs and kind of equal highs makes me think that this is an ascending triangle. And if we take an ascending triangle, you usually want to take somewhere in the middle, like kind of back third, and you take that as distance. Now, I've made this a little shorter, and the only reason I've done that is I would have preferred that this was hitting resistance up here at the 6200 each time and selling off. Because it wasn't, I've chosen to pick this particular level for it, and that just goes with intuition about trading the markets for a long time. But if we get through here, what's it signaling? Well, it's signaling upwards of at least 6,500 on the ASX 200, which would be a nice move as well. All the markets generally move in unison, and of course they're led by that S&P 500, the big one of them all. So right now we are seeing strong breaks across the board, pretty positive earnings to summarize, and a lot of it will lie down to Microsoft and Tesla on Wednesday to set the complete tune for the rest of the earnings season. So if you've enjoyed this video, please make sure to subscribe and like the video. And of course, comment down below with what your favorite stock is right now that is in your portfolio. I'd love to know what everyone's favorite stock is. Thanks everybody. Have a good trading week and good luck. Bye.